talk to you about the 35 years old elephant in the room that no one wants to see, but that has been crushing businesses, mainly small and medium enterprises in emerging markets. And I don't have a PowerPoint presentation, I am the PowerPoint. So I will talk to you about the FATF, the Financial Action Task Force regulations that have been really crippling business since 35 years in emerging markets and mainly discouraging foreign investors from operating in emerging markets because of all the compliance issues and regulations. Let me give you a brief overview of the FATF, the Financial Action Task Force that you all know for sure. FATF was created in July 1989 in Paris by decision of the G7. Later on, many countries that joined FATF, and the main goal of the Financial Action Task Force at that time was to curb money laundering, or to stop money laundering, mainly money that was coming from drug business. FATF has a secretariat that is domiciliated at the OECD in Paris. It includes now 200 countries, about 200 countries that are members. It is chaired by a revolving president every year, and they issue all the regulations that the countries have to follow just to be in compliance and to make sure that they're controlling money laundering, they're controlling terrorism finance that was added later on, and other issues as well. Now, the Financial Action Task Force assesses countries and classifies them whether they are white or gray or black, which is quite a racist kind of financing of listing country, of classifying them. And of course, no one wants to be in the black zone, in the blacklist, because this creates a lot of problem for those countries regarding money transfers and all this kind of stuff, or even in the gray zone. Now, in addition to controlling countries or setting regulations for countries, the Financial Action Task Force does regulate as well the financial sector, the banks, and the national banks as well, the central banks, through its tentacles. It has tentacles that you all know. In every country or every region, there is an arm of the Financial Action Task Force. In our part of the world, in Georgia, and our part of the world, it's called Moneyval. In this part of the world, it's called MENA FATF. And it's the controlling body that really looks into the financial sector, into the banks, into the national banks, just to see if there are some shady transactions, or if those banks are really following the modus operandi and all the regulations. And the banks that do not follow are definitely sanctions, and I mean, it's pretty difficult for the banks who do not follow. Now, what I want you to know is that FATF is organized like a pyramid. On the top of the pyramid, you have the Financial Action Task Force as well as its controlling bodies. Under it, you have the international banks and the national banks. The third layer are the regional banks and the local banks. And at the lower part of the pyramid, at the bottom of the pyramid, you have the private sector. I just have one picture that I will show you so you understand how the pyramid works, and then you can leave. Can we have the picture, please? Okay. So, at the top, you have FATF and Manival and, okay. Under that, you have the national banks, the central banks and the international banks. Under that, you have the regional banks and the local banks, and the private sectors is below, okay? So, this is exactly what's happening on the ground. Now, all the regulations are seriously hindering small and medium enterprises in the developing world. And as you are well aware, I mean, 90% of businesses are small and medium. One thing for sure, the large companies such as, the multinationals, those that are on NASDAQ or the CAC 40 or the FTSE or whatsoever, they don't even feel the regulations of FATF because no bank ever stops a payment coming from those multinationals or getting to those multinationals. Whereas for small and medium enterprises dealing with the financial sector, with the banks, is Golgotha. I don't know, I'm speaking to you not as the chair of ICC Georgia, I'm speaking to you as a businessman, the owner of a small or medium enterprise company where we have to deal on a daily basis with banks in several countries. Now, the major problem is the threshold amount above which you are on the radar screen of the financial authorities of your country. And this amount is $10,000. Now, any transaction above $10,000 has to be reported to the financial bodies. And then, of course, the banks that have to follow the regulations of FATF and of their national banks, they want to take zero risk. So any transaction above $10,000 is really scrutinized very closely. Now, what you need to understand, and I don't know if many of you know this, but the $10,000 was established 54 years ago in 1970 but in the United States by the Banking Secret Act. And since 54 years, we are still talking of $10,000. The $10,000 of 1970, if we take into account inflation, equates to $80,000 today. In 1970, in the United States, with $10,000, you could buy a Cadillac Eldorado, you could buy a Lincoln Continental, a Cherry Corvette, a Jaguar E-Type, a Mercedes SL. Today, if 8 of us go this evening to a high-end entertainment place in Dubai, we will pay more than $10,000. Today, you have sneakers, Air Jordan, that cost $20,000 and $30,000. Sneakers, a pair of sneakers. So, how can you serve as a business person when the threshold is $10,000? And as we hear, the Central European Bank now is throwing out the idea that it should be €1,000. Now, the financial institutions, the banks, that do not comply with the regulation of FATF, whether they are multinational or not, are sanctioned. And they pay huge penalties. So no one wants to take the risk. Everyone, all the banks, whether they're multinational, international, local, regional, they all go into over-compliance or de-risking to avoid taking any risk, so they're not penalized. It gets even worse for the local banks and the regional banks. that can lose their corresponding banks if there is one single questionable transaction that goes to the corresponding bank, and we know it very well in our part of the world, the accounts of the local bank are immediately suspended. So, what happens practically is that investors who come from the West to count emerging markets, whether it's Georgia or Armenia or Pakistan or India or anywhere else, and who transfers, let's say, $200,000 from their account in Paris or in New York or whatever to those local banks, they have to deal with the nightmare of justifying every transfer. And sometimes transfers are frozen in the local banks for weeks or months till all the paperwork comes, and then it might be cleared or not cleared and the money returned. So, this is a terrible situation for emerging countries that cannot rely on foreign investment to boost their economies, to get wealthier, and to fight poverty in their countries. Now, the FATF policy is zero risk. I will give you an analogy so you understand what is zero risk. Let's assume that you are driving from Abu Dhabi to Ras Al Khaimah. It's about 2.5 hour drive on average. However, the UAE authorities decide that they want to reduce the risk of fatalities on the road from 150 per million to 0. So what they do, they build speed bumps every 100 meters. And then you cannot average more than 10 kilometers per hour, and it will take you, instead of the 2.5 hours to reach Ras Al Khaimah, it will take you 25 hours. So what happens in this case? What happens is that people will not drive anymore. They will take the plane to go to Ras Al Khaimah. And when they take the plane to go to Ras Al Khaimah, what happens? All the businesses that are on the line from Abu Dhabi to Ras Al Khaimah on the road die. Shops, mini markets, gas stations, hotels, motels, they're all dead. And this is exactly what's happening now with the FATF regulations, where many businesses are dying or have died because they are unable to justify the source of the income that's coming as an investment. I will give you, okay, I'm looking at how much time I have. I have 8 minutes. I will give you another example. Let's assume that there is a Pakistani small businessman who wants to build a shop, okay, in Karachi. His brother is in Germany. And the brother is on the payroll salary, monthly salary, let's say 2,000 euro a month. The brother will promise him 50,000 euros so he can build his shop. So he goes to his friends, he takes 10,000 euros from one, 5,000 euros from one, 3,000, etc. He collects the 50,000 euros and he transfers them to Karachi to the bank. When the money reaches the banker tells the brother, okay, now you have to prove to me from where this money has come. And you tell him, that's my brother. He told him, yes, but your brother has to prove to me how he got the money. Because you told me that your brother has a 2,000 euro salary per month. And then it's impossible to prove it because you cannot prove that you borrowed from your friend, okay? So the money goes back to Germany and the shop owner cannot have his shop. This is what's happening practically on the ground. Now the question is, after 35 years, did FATF succeed in stopping money laundering? And the answer is a resounding no. Up till now, money laundering is flourishing. Why? Because money launderers don't use the usual transfer means to transfer their money. They use cryptocurrencies, they use real estate transactions, they use trade of luxury cars, precious metal, artwork, hawala, mules, peer-to-peer transfer. This is how they operate. So, controlling anti-money laundering is not working. The regulations are destroying emerging markets totally, and no one wants to talk about it. You know, I come from Lebanon. I was born in Lebanon, and I was naturalized Georgian about 20 years ago. The common point between Lebanon and Georgia is that both of them are very small countries that have been invaded over the centuries by a lot of invaders, be it the Persians, the Ottomans, the Romans, the Greek, the Arabs, okay, everyone. Okay, so what happened is that Lebanese and Georgians and also other nationalities from smaller countries have developed an incredible ability to adapt. So I always say, when a Lebanese or a Georgian fall in a hole, in a pit hole, their first reflex is not to come out of the pit hole, is how to live in the pit hole. And the international community has been living 35 years in the pit hole of FATF. And what they do, they hire experts and consultants to tell them how to live in the pit hole. That, you know, at noon, the sun is in the center up. So at noon time, you have to be in the center so you get your vitamin D. At night, the bats, they go from the north of the hole. You have to sleep on the south of the hole, okay? And this is how we have been living for 35 years with the FATF regulations. And finally, at the ICC, we have decided to come out of the pit hole. And thanks to all my colleagues from the region, from the broader MENA region, we took a resolution in Karachi 2 months ago, in February, to create a task force to tackle those issues and to speak with FATF. And moreover, to have a representative from the ICC sitting in the Secretariat of FATF, because technically no one from the Financial Action Task Force understands business. It's as if you bring the Association of Philosophers and you ask them to set the rules for the brain surgeons. This is exactly the situation of FATF. So we have now a task force that has been established. We will be circulating within 15-20 days a questionnaire to several thousands of businesses through the ICC network, so we better understand the impediments and the problem that they are facing while dealing with their banks. And I totally understand the banks, as a matter of fact, because if I was the owner of a bank, I would do exactly the same. I would take zero risk. Otherwise, I would go bankrupt. So, this is what ICC is doing. I would like to thank my colleagues from the ICC in the region. I would like to thank as well our Secretary General, John Denton, who had the courage and the guts to establish this task force despite the very cold feet that we had at the headquarters. And what I promise you is that we will be pushing to get out of the hole and to bring all of you out of the hole. Thank you.
Thank you very much, Fadi. This whole session is about this a challenge. So I think we'll have the discussion at the end, Fadi.